Hey guys, hope you and the families are doing well. In this short video, I'm going to teach you how to swing trade the leading stocks in the market. I'm going to teach you very quickly how to identify them from a technical perspective, but also from a fundamental perspective as well. To do that, I'll take you through two of my trades from yesterday in Reddit and ticker ALAB, and I'll explain the thought process for why was I targeting these two stocks in my session plan for the 19th of November 2024. There they are. There's Reddit, MIR as well, and also ticker ALAB. Then we're going to go into the fundamentals, and I'll teach you what to look for in terms of big earnings, big sales growth, EPS estimates, all-time high territory, relatively new IPO, trading around all-time highs, higher quality growth funds in there as well. So I really hope you're going to find this video informative and educational. Market Surge are today's video sponsor. If you're interested in a discounted trial, then you'll find a link to that in the comment section and the description below. So the first half of this video is going to focus on the technical characteristics that market leading stocks often display, and we can see with Reddit and ALAB. And then the second half of this video is going to focus on the fundamentals that market leading stocks often display. That's going to be the big earnings, the big sales, the EPS estimates into all-time high territory, forward guidance being raised. And that's what we're going to cover in the second half. But we're really trying to marry up both the technicals and also the fundamentals when we're thinking about these market leading stocks, which for me, Reddit and ALAB were both displaying at the time of the entry. So the entry for me is on the 19th of November 2024, and it is taking out the high of the 18th of November 2024. For both, I used a buy stop limit order as the order entry method technique. But there's some key technical criteria that I want to be focusing on for when you're trying to dial in and go, okay, what are some of the strongest stocks in the market right now? Number one, they're going to be around all-time high territory. So market leading stocks are often around their all-time highs, sometimes 52-week highs, but oftentimes it'll be all-time highs for the creme de la creme. Okay, they can also be relatively new IPOs, which when we go to the market surge charts in the second part, you'll see both are relatively new IPOs. Reddit IPOing in 2024. So you can see the recent all-time highs set for Reddit. Now that is going to be on the 11th of November 2024, and for ALAB 11th of November 2024. So both within the prior week or so had hit 52-week highs plus all-time highs. Really like that, because if you think about it, if these stocks can start trading in all-time high territory, anyone of any significance that owns the stock, I'm thinking institutions, big traders, large operators, they're all going to have a profit. None of them are going to be underwater. There's no overhead resistance. There is no overhead resistance of anyone significant who owns a stock. That is really good. It's the proverbial blue sky. So leading stocks, real kind of market leading stocks around all-time highs when they base, and I'll show you where to look for in terms of the setups. Really like that. Now if we just backtrack prior to the all-time high, what do you see here for Reddit? And what do you see here for ALAB as well? What do you see? There's big earnings gap ups. Now, again, not every earnings gap up is the same, is equal. I like to look for on the earnings gap what I call bullish synchronicity. Now, even better if this earnings gap is going into 52-week high territory, but even better if it's going into all-time high territory as well. So what do you see on the earnings gap for Reddit? There's very large relative volume coming through, which tells me large operators are active, but I'm looking for a concept called bullish synchronicity. So what I want to see is a widespread candlestick. So the positive price action is being confirmed by the large relative volume that is coming through on the earnings gap. So what do you see? Does it look like visually, this way you build out your mental representations, the earnings gap up, does that look like institutions are dumping their position, or does it look like they're buying hand over fist and they're in there? Well, note how the prior closes here. So it gaps up, opens near the low of that daily candlestick and closes pretty strong near the high. There's a little what I call a supply shoe, but that is a very strong earnings bar. That to me, and my visual representation of, okay, or mental representation of what does institutional accumulation look like on an earnings gap, that's it right there. Like that is institutions piling in. We see a very similar bar with Arista Labs as well. I think that's how you pronounce it, Arista Labs or Astera Labs. I'm dyslexic, so I'm terrible with pronunciation, so that's why I just call it ticker ALAB. Works better for me. So what do we see here? Okay, large relative volume coming through again. The prior close here, gaps, opens near the low of the bar, a little what I call a shakeout demand tail, strong close near the high of the bar. Again, bullish synchronicity. The positive price action is being confirmed by the large relative. This is what institutions on an earnings gap getting in looks like. Like this is visually what it looks like, where people want in, people are buying it. That is not institutions selling into it and you get a big kind of gap and fade. That is what I call bullish synchronicity. Really strong. So following these earnings gaps, the stocks then ALAB and Reddit push up and make an all-time high. Really good. Now I don't want to be chasing the stock up here. Okay, as a swing trader, I'm not going to be chasing it up here. I'm not going to be chasing it here. The first reference point So this is where we get more into the details of looking for specific setups, okay? So the first checkpoint, the first reference point for me is the 10-day EMA. The 10-day EMA, which on my chart is the black line that you see here, okay? I don't want to be targeting Reddit up here. I don't want to be targeting Arista Labs up here, okay? I don't want it up here. I want it down here when it pulls in to the 10-day EMA. Now for Reddit, it puts in an inside bar. If any of you watched my video on Rocket Lab and looking for the inside bar that I call a trigger bar, inside bar on the 10-day EMA, what do you see? Reddit inside bar, 10-day EMA, everything that we just spoke about, and we'll bring in the fundamentals as well. So inside bar, first checkpoint after the big earnings gap up here, that's where I'm looking for it. Inside days around 10-day EMAs, that rhymes, doesn't it? Is where I'm looking for the setup. Like if we get an inside bar around the 10-day, I'm going to be really interested. I also talk a lot about shakeout demand tails and gap down reversal bars. ALAB is a shakeout demand tail on its 10-day EMA. So when you get these leading stocks, and you'll see it from a fundamental perspective in a couple of minutes, when you get these leading stocks that have had really good earnings reactions, they may have hit 52-week highs or all-time highs, preferably after their earnings reaction, then they pull into the 10-day EMA as the first testing of the 10-day EMA following the earnings gap up, and or the 21-day EMA. That is a really key spot where I'm looking for setups, which I talk a lot about on the channel. Trigger bars, shakeout demand tails, gap down reverse bars, all covered in the blueprint video and lots of other videos on the channel. So that can be a real sweet spot. 10-day EMA, 21-day EMA. I would really suggest going and studying stocks that have made some mega runs. Look at the earnings gap up. So specifically, look at the earnings gap up and then look how it's set around the first test of the 10-day EMA or the 21-day EMA. And go build out your kind of playbook of those type of setups, and what do they do, what do they exhibit, what do they look like, what does the earnings gap up bar looks like, what does it then look like when it pulls into the 10-day EMA? Do you get an inside day, what I call a trigger bar? Do you get a nice shakeout demand tail coming through here? Now something else to bring in as well is relative strength. So this is where we'll really starting to go into the details and the nuances, okay? So the bar that I'd like you to focus on is the daily candlestick for Reddit, ALAB, and the QQQ, which is the proxy for the NASDAQ 100 on November 15th, Friday, November 15th, because the triple Qs rolled out of bed. I just call this rolling out of bed. Look at this here, okay? Really, really bad bearish day for the market, right? The prior close is up here and it just rolls out of bed like this. I was thinking there was going to be a shakeout towards the 50-day, and up here things were just looking really, really extended anyway. But up here, right, the prior close is here, gaps down below the 10-day, opens here and just roll. So it loses the 10-day and the 21-day in a single session. Rolls out of bed. Like that is the indexes rolling out of bed. Now this is relative strength. So you can look at relative strength on a longer term, a mid-term, and a tactical short-term perspective, because when the indexes roll out of bed, talk a lot about this. Pullbacks create opportunities. Like pullbacks create opportunities and guide me to where the leadership is. So when the indexes roll out of bed, absolutely fantastic, because I'm then going to dial in and go, what stocks didn't roll out of bed? What stocks held up? What stocks did the institutions not want to let go of easily? And what do we see? Well, does Reddit even close below its 10-day EMA? Nope, doesn't even close below. See that? 15th of November, doesn't even close below its 10-day. Actually pulls back into the 10-day, bounces off the 10-day. Look at that. So Reddit is doing that. Reddit is pulling in to the 10-day and bouncing, whereas the triple Qs has just done that. Like that is absolutely screaming relative strength. And then the Qs goes and puts in an inside bar. And Reddit puts in an inside bar on its 10-day EMA on the 18th of November. And I really like it when you get a big kind of roll out of bed followed by an inside bar in the indexes. Really, really, really interesting. Got a lot of people thinking, this is just going to continue moving to the downside. Oopsie daisy, no, it doesn't. But this is relative strength. So when the indexes roll out of bed and have a big down day, pay attention to what leading stocks don't. What leading stocks resist the downward drag, hold up above key moving averages, potentially bounce off of key moving averages. You look at ALAB, okay, yes, it closes below its 10-day EMA on the 15th of November, but look at that in contrast to the triple Qs. Like look at the range and the down bar of the triple Qs. Remember, there's a big gap down. Prior close up here and it just moves all the way down. Whereas ALAB is a little doji underneath the 10-day EMA. It's kind of like a little shakeout. And look at the volume. It's hardly any volume. I mean, look at Reddit as well. It's hardly any volume relative to what we've seen on the earnings. Institutions aren't selling. In fact, they may have just gone, thank you very much. Short-term liquidity and perceived value, we're going to step in here. It's two things that institutions require above everything else, liquidity and perceived value. Really, really good bars. Really good bars if you have the context of the market on November 15th and you understand the context point and what relative strength looks like. And then what do you have with ALAB? Well, ALAB just shakes out here, 10-day EMA, little gap, shake out to the 10-day, bounce, textbook. shake out demand tail off the 10-day EMA in a leading stock that recently hit an all-time high, plus a big earnings gap up. Like, that is relative strength. These are some of the characteristics that the market leading stocks display, especially when they have their big earnings coming through like this, great reaction to the earnings, and then they set up around their 10-day EMA as the first reference point, or the 21-day EMA as well. So now what we're going to do is go across to the market surge charts, and I'm going to teach you the fundamentals to marry up with the technicals. So I've got the market surge charts loaded up, and I'm going to take you through ALAB and Reddit and teach you the key fundamental criteria that I dial in on to help identify those market leading stocks. But for me, it's about marrying up the fundamentals with the technicals, then dialing in, identifying those market leading stocks when they set up around 10-day EMAs or 21-day EMAs, and then trying to get position. Even better if there's just been a big earnings gap up, the stock was trading around all-time high territory, then it pulls back and sets up around the 10-day EMA or the 21-day EMA, as I was teaching you in the first half of the video. So what are the key fundamentals that I'm looking for? Well, market leading stocks will display excellent earnings growth and excellent sales growth, with EPS estimates going into all-time high territory and forward guidance being raised. Now, you will note before we start going through that ALAB, and you'll see it on the Reddit chart as well, are relatively new IPOs. So I really like looking for new IPOs with the type of fundamentals that I'm going to show you, trading around all-time high territory and setting up as per my criteria. So my eye initially gets drawn to the bottom left down here. This is going to be the quarterly earnings growth and also the quarterly sales growth as well. So this is the quarterly earnings and sales growth, and the percentages that you see are the year-over-year comparison, so the year-over-year comp. Okay, so what I'm looking for is the bigger the better in terms of the quarterly EPS growth and the quarterly sales growth as well. So if you take a look at ALAB here, in the last 4 quarters they have reported 200% year over year, 190%, 218%, 999%. And then you can see the forward guidance as well. So if you think about this on a rate of change, in the prior quarters, the company lost 10 cents, lost 11 cents, lost 1 cent. Now it's the rate of change of things as well. How quickly are things getting better, or how quickly are things getting worse? Okay, the market is a forward-looking mechanism, and what the market concerns itself with most in the majority of cases, and certainly these market leading stocks, is what is the expectations of future earnings. Davis said that 50, 60 years ago in his book. It's really the expectations of future earnings that drive share prices higher. I think Warren Buffett said in the short term, the stock market is a beauty contest, but in the long term, it's a weighing machine, and the weighing machine referring to the earnings per share of the company. So this is what I'm looking for here. Now, I'm not just looking for, okay, it reported a cent and a year ago it lost a cent. What you actually see here is a material acceleration in the quarterly EPS. So I know we're going deep down the rabbit hole, but you got to do a little bit of work here. You got to do a little bit of thinking. So the company goes from losing money to then a quarterly EPS gain of 11 cents, 19 cents. Now here's where the kicker starts coming in. 13 cents, 23 cents, and look at the estimates. 26, 26, 27, 30. So look at the rate of change, like how this company is accelerating in terms of the profitability. Now, what I like to see as well is sequential growth in the quarterly sales coming through as well. So if we take a look, about 8 quarters ago, the company's sales were reported at 17.7 million. Then it went to 10 million. And then here's where the kicker starts coming in, okay? Watch the rate of change of the acceleration here. 36 million, 50 million, 65 million, 76 million, 113 million, 127 million, 133 million, 144 million, 160 million. So think about that. In the space of, that's going to be about 10, 12 quarters, the company's quarterly sales have gone from about 17, around 10, 17 million to expected to be 160 million. Think if you had a business and your quarterly sales just went from 10 million to 160 million, and you were a publicly traded stock or publicly traded company, do you think people would want to buy your shares? Again, it's the expectations of future earnings that really help propel these things. So you want to be aware of companies, like I was teaching you in terms of the technical side of things, what to look for, but this is some of the key fundamentals to be looking for as well. Then what I really like looking for too is the annual EPS estimates. So take a look here. In 2022 and 2023, company lost 18 cents. 2023, company lost 10 cents. But here comes the kicker. You ready? 2024 EPS estimate, 72 cents per share, up 600. That's either 600 or 822% year over year. And the little green arrow, you see that? That is forward guidance being raised. So the company has raised their guidance even better. Okay, market generally loves that, especially with these growth TML market leading stocks. Forward guidance being raised. Chief exec coming out and saying, hey, we were guiding at this, but guess what? We're going to blow this. We're going to blow this quarter, blow this year out of the proverbial kind of cannon. This is going to be a great year for us. Oh, and next year we're raising our guidance as well. Okay, this is key stuff to be focused on. Next year, 2025, up 61%, for guidance being raised. So these are some of the keys that I'm looking at here in terms of the quarterly earnings growth, in terms of the quarterly sales growth, but going a little bit deeper. Okay, saying, okay, is there sequential growth? Is there a significant increase in terms of the quarterly EPS being reported? You can see the company going from reporting or losing money to then 11 cents, 9 cents, then up to 30 cents. What if they can keep growing? What if they can go 35 cents, 40 cents, 45 cents, 50 cents, 60 cents? Then they can really keep growing. And remember, relatively new IPO right around all-time high territory. If you look at these institutions, there's another little subtlety as well. Okay, these are higher quality growth fund. Market Search has 20 of them, and you can see what they've been doing in recent quarters. So I really like it when they have when it's a new IPO and I see them initiating and adding to positions, such as the Invesco Discovery Fund, initiated in June 2024 and then added. So Q2 initiated a position, added in Q3. Love it. Why? Because they're likely to hold it for a prolonged period of time. They're probably not going to just trade in and out of it in a couple of weeks or a couple of months. They like to build positions, sit, and then ride the longer term trends. That's how these institutions tend to trade. Fidelity in there as well. Alga Small Cap Growth Fund in there as well. Columbia Small Cap Growth in there as well. So I like it because then what I'm going is, okay, I saw that really positive earnings reaction. I saw it visually. That looks like institutional accumulation. So then I wouldn't be surprised in Q4, when we get the data for Q4, more institutions are on there. These guys have increased their position. Maybe more guys are coming in. That's what I'm looking for. So it's really about marrying up the technicals with then what you're seeing on the fundamentals. And is this a leading stock? Is this displaying characteristics that you would associate with a market leading stock? And that's why you need to study the market leaders, to have those mental representations in your head for what do they do? What do they look like? What do they look like from a technical perspective? What do they look like from a fundamental perspective? And then you screen for and you look for those type of stocks meeting that criteria from a technical perspective, but also from a fundamental perspective as well. So I know that I'm just rambling at the end of this video, but a really key book in terms of deliberate practice and learning and developing your skill set, if you want to learn about it, is Peak by Anders Ericsson. Peak by Anders Ericsson. Fantastic book, changed my life. It's all about deliberate practice and building out mental representations, treating things like a skill set and improving yourself. So that book, Peak by Anders Ericsson, if you want something to read over the weekend, is really good. It's actually universally the best parenting book that I've ever read as well. So I'll wrap the video up there, guys. Thank you very much for watching. I really hope that helps you from looking at a market leading stock from a technical perspective, but also from a fundamental perspective as well, and some of the things that I really dial in and focus on. So thanks for watching, thanks for supporting the YouTube channel, and I will see you in a future video.